Good evening, everybody. Welcome to this evening's Contenders live stream. Today, I think, is going to be a very good live stream as we will be getting back into the subject of volume, footprints, and order flow. Before we begin, please pause the screen and read the disclaimer if you haven't done so. It basically says this is not financial advice because this is educational content. So, having that said, let's move on to the stream of tonight. So, what is the recipe for tonight? Tonight, or in this stream, I'm going to go over algo chart of the week in a second, and then I'm going to cover a part of the different chart types that you can find on ExoCharts and how can you read them, as we will dive deeper and deeper into the subject matter once again of volume. Basically continuing the volume series of the contender series. There's a couple of chart types, so I'm not going to be able to cover all of them in one session. So I will do a part today, and then in the next contenders stream, the other chart types, and then we'll see how far we can get for that. And finally, there's going to be space to answer some questions, should you have any. And if you do have any questions, then as we go along in the stream, please write them out so we can gather them, and I can answer them in the end of the stream. So let's begin then. Algo chart of the week. This was my trade. I'm currently in a long position. I am considering this as a swing trade, and my entry was a kind of a different one than I usually do, because I said many times that I don't ladder into entries. Well, this is a little bit of an exception because I traded it a little bit differently, and for that reason I would like to go over the chart with you guys. So let's do that. Let's pull up the chart and see what we got over here. I hope that everyone can hear me, by the way. Forgot to check. I think everything should be fine. Yeah. All right, let's continue then. So, looking at the algo chart. To be honest, it was a little bit of a difficult one to choose because I also like another coin really a lot. It's Lend. And it was really a tough choice which one I wanted to pick. But ultimately I chose for algo because I do think that potential wise it has the most potential to have like a really good run up if some levels are being reclaimed. So, and in order to explain you why I chose this, or why I really like this coin at the moment, is we have to go a little bit back in time for that. So I'm here on the daily chart, going on to the daily chart, and essentially the first thing that I wanted to show you guys is this, more or less, this head and shoulders pattern. It's not really necessarily a perfect one, but it does meet the criteria in one way or another. Especially here you have like the left shoulder, you have the head, and then the right shoulder. Or, well, basically it's an inverted one, so you could also argue that this is the right shoulder and this is the left shoulder. Little detail, doesn't matter. But what does matter is the volume profile that fits. So in the beginning you have like your sell-off on high volume, then you have like a rise in price, so to speak, a weak rally, upon you have like yet another sell-off. And what is important for a head and shoulders to notice, I feel that I need to slow down a little bit. So let me calm down and let me explain you why this is a valid head and shoulders. You had the drop in price, which was on a pretty much high volume. You can see that here it's kind of drying up, and then you had like a rally in price, and you starting to have like some sort of little bit of bull volume. Then you have another sell-off making a lower low, but if you compare this to the initial sell-off, this is a lot lower. So that basically indicates that selling is more or less drying up, and basically making a bottoming pattern, in so to speak. And this is a pretty large range of time. So therefore, these are those situations that I do like patterns, because on the higher the time frame, the more reliable I find these kind of patterns if they meet specific criteria. So then the second rally up, so you had like the second sell-off on decreasing volume, and then you had another rise in price, and you see slightly increase in bull volume. Then you had somewhat of a little bit of a weird shoulder as well, but again this sell-off again on lower volume, and then ultimately you did had the breakout on a massive increase in volume. You shot all the way back up to basically to this previous consolidation area, which offered resistance, got rejected pretty hard off of that, and it essentially backtested this broken neckline or trend line, whether it was a head and shoulders or not. What is 100% valid is this downward sloping trend line that ultimately got broken, backtested here on a daily time frame. We had to rally up, and then ultimately we came back all the way down to where this downwards old trend line meets the monthly, and essentially it got a perfect backtest, and based off of there we came up once again. We flipped this old daily, really old daily, so this little consolidation area, we flipped that almost perfectly, and basically flipping some other really important levels, which basically brings us where we are right now. So in order to see that a little bit more in detail, we have to zoom into a little bit of a smaller term time frame. And basically from the back test all the way to the low, you pull a fib sequence to, at that point, at the high, you had a back test of the 382. Basically classing this as some sort of a bull flag. Then we had another rise in price, right? So we basically came down back below the daily. We touched the 382. We flipped the daily once again, and this is basically where we came back above the monthly. And this is the moment where I posted the chart of the week. And the thing is that my trade went as follows. So what I did is I basically day traded this into a swing trade. And my first entry point was essentially literally at the monthly. The thing is that price was set at around here, right? So I'm, especially with altcoins and especially with Bitcoin being a little bit volatile, I'm a little bit more careful with alt. So I'm not chasing the trade at all. I'm in no rush to chase this trade. So what I wanted to see was, at first of all, I wanted to see a backtest of the monthly. And then, however, you should be aware that if you do have a legitimate breakout of a range, you don't really want price to get back into the range. So if it does, I do expect a longer range to form. And in all honesty, BTC volatility gave the pullback that I was actually looking for. And at the same time, it also proved that algo held up really, really well. So to show you in detail, this is how I traded it. So the way that I traded it, I was looking for this monthly to be hit. At first, because it came essentially back into the range, I decided to day trade it from the monthly basically into a larger swing trade. So the way that I traded it, when the monthly was hit, I entered into a long, and I traded it basically up to the CC. So if you pull a fib sequence from here, from the high all the way down to the low of the monthly, slightly front ran the CC, and I actually hit the take profit target to the exact set. So pretty perfect. I took 75% of this trade here with the intention on adding it back lower as the range further develops. Entry points were once again apart at the monthly, apart somewhere here in the middle at the daily, and ultimately my final aim, my final order was set at the one-to-one extension of this correction with basically the idea of swing filtering this low. That was my idea, and this morning I was still under the impression that I might actually get that order filled. Unfortunately, as you can see, the last order that got filled for me was at the daily level. And I don't really mind because I already do have my orders filled, but it would have been nice if it actually happened. But anyway, I'm now still in the trade. Actually, just before the stream started, I did took profit because to me, I just really don't want to be bothered by over managing this trade. Basically, my targets that I'm looking for is actually the upper weekly here. So there's 2 weekly levels, and basically slightly above that you have the daily level. And after that, you really don't really have so much resistance anymore, because after this weekly is being reclaimed, I think clear that, and I think Algo really has a good chance to run really, really, really hard. There's this daily above there and the CC above that, but in my opinion, the thing is that I would say that they take profit points 100%, but they don't really have a lot of confluence, because if you zoom out to, let's say, the weekly chart, look at how this coin behaved. There's literally zero resistance above this weekly. The first real resistance that you're going to have above this weekly that I marked out here. So this is essentially my target, which is basically, if it works, if it plays out, it is 20% gain. So I'll take that one definitely. But if it does reclaim that weekly, then I think the first resistance that we're really going to see is going to be this weekly set at around here. And that would literally give you like, yeah, it's pretty crazy. So that's why I really like this coin. If it does manage to reclaim this particular level, then I do think that Algo can have a great run. But also be aware, these are really great percentages. So I do want to stress, trade this sensibly and take profits at very important levels, because until we reclaim this weekly, there is levels ahead that needs to be reclaimed or that need to be touched first before we can even think of having such an increase in price. So therefore I remain sensible and trade it level to level because of these levels that are cleared, and they are strong in my opinion. So first hand, I'm looking basically to trade this up to the weekly. Do flip this weekly. I might add a little bit back on. Flip this weekly. I will also take profit, most of my profits here at the weekly, and then essentially, if price even reaches there, then I'm gonna review and potentially take a new swing trade. But until that happens, I'm just gonna set alarms. So I'm not gonna anticipate on this huge rise. All I'm saying is, if you do reclaim this level, that is something that you can potentially look out for. So, yeah, ultimately I did not get the fill below. And I do want to see this. Oh yeah, that's what I forgot to mention. The secondary plan that I had. So I didn't got this order didn't got filled. So that basically forces me to enter higher up. So where would be a good place to do that now? Let's say if you're not in a position and you want to get into a trade, I would say wait for this weekly to be reclaimed, right? And because that basically gives full confirmation that you've moved out of this range and you've reclaimed an important horizontal resistance levels. So ideally you want to see that happen on volume. Bitcoin might help, maybe not. We're going to see how that's going to play out. But that would be a potential new trade then. Until then, right here is in my opinion not a good place to enter into a trade, because we might pull back. Who knows? So that was chart of the week. Let's move on to the main subject of today, as I'm sure that this is going to be very interesting for you guys. So let me switch up some screens, because I want to do it in a specific way. So allow me. There we go. I believe you guys can now see this screen. Yes. Apologies, the first time that I'm doing it like this. So there we go. Right. Just to double check. Suppose you can see now the screen. Yeah. The thing is, let me explain what I'm trying to do. I'm trying to switch up my screens so that I can essentially have sit a little bit more comfortably. So bear with me a little bit. So, right. To summarize, algo chart of the week. Basically, I had a laddered long entry off of horizontal levels, keeping it simple. I'm taking profit at the upper weekly, at each weekly essentially, and each horizontal resistance levels. Invalidation of my trade is close below the previous low on an uptick in volume. Although I just took profits and I have moved my stop loss into break even, and this happened basically just now after I finished this presentation. So just for transparency's sake. So that's my game plan. Let's move on to the meat of this stream, which is chart types. So basically what we're going to work towards is moving away from time frames. Different chart types can help us traders to make better trades. And in my opinion. And the chart types that I will be talking about may very well include chart types you've never seen before. So that's why from this stream, I will provide you with the explanations of what they mean and how you can use them, of course, but do keep in mind that it will probably take some time before you fully understand each and every chart type, and also to digest all the new information that's contained within this charts and stream as well. So bear that in mind. If you look on ExoCharts, let me take a sip of water. Whoops. There we go. So on ExoCharts, we have a selection of helpful chart types that many would have not have seen before. In total, there's seven types of different chart types. They're not necessarily overly difficult to understand, but if you are able to use these chart types, then it allows you to slowly move away from the time frame charts, where you normally it has been basically common, as we've been teaching you guys, to wait for, let's say, an hourly close or 50 minutes close, or if you're a swing trader on a daily or 4-hour close. By using these chart types, you can now read and judge momentum, for example, in a variety of different ways with different chart types. And this can actually help you get into a trade at a very early stage, as you don't really need to wait for a bigger term time frame close or for confirmation. And which one you ultimately use is really entirely up to you, and ultimately it really boils down to personal preference and also how well do they fit into your own personal strategy. So of all these chart types that you can see here in this image, as you can see, we have the pointer figure charts, the trend reversal charts, the time frame charts, delta charts, volume charts, range charts, and tick charts. I don't use pointer figure charts at all, and yeah, so I don't find them useful. They're relating to entirely different theory than, in my opinion, than order flow. They relate much more to accumulation and distribution schematics. That's what I would use them for, but even there I don't use them. But anyway, that aside, today what are we going to cover? We're going to cover the range Y, and the tick charts. Because if you do understand those, then it will also make it a little bit easier for you to understand the trend reversal chart type. And I think that's too much to cover also today, so that will be covered next week. Basically, the reason why we use these type of charts is primarily to remove noise, as a new candle will only be created when a certain amount of trades, a certain amount of price movement in dollar value or volume has occurred, rather than, let's say, every 15 minutes. So this ultimately leaves a chart with less noise and leaves only useful data for you to see. And personally, I also really like it because it just gives you visually a lot of less noise. So let's start off with the range chart. As you might have seen in the previous picture, there's a couple of different range charts that you can choose from. You can choose a 6 range chart, you can choose a 30 range chart, but essentially what does it mean is, let's, for example, a 6 range chart would create a new candle every 6 ticks. that is essentially every $3 of price movement, a new candle is going to be printed. And the ticks represent 50 cents. So one tick is 50 cents. Therefore, 2 ticks is $1. So if you look at a 6 ticks range chart, then you're really looking in dollar fluctuations of 3. So basically divided to 2. Hope that's clear. Sometimes, so basically every time, just to repeat, so every time that price moves $3 up or down, then a new candle is being printed. And the thing is that range price may come past the last range tick, but if this last price jump was, for example, if you have a really big order coming in, then sometimes it gives more than let's say 3 bars or 6 bars, so to speak, because this order first needs to be filled before a new candle basically can process this information. So sometimes you have like these glitchy looking candles, but in reality it's not a glitch. It basically shows that a big order is being processed. Sometimes there's also slippage at the end of a range candle. And sometimes then it will, for example, instead of 6 ticks, it will be like 12 ticks, because price does need to cross that tick and start trading outside the range to validate the range. Hope that makes sense. If it doesn't, then please feel free to ask a question. I'm going to continue with this, so maybe also your question is getting answered in the process. But let's show some visual examples. This is basically an example that we had today, and you can see that price made a directional move to the upside. In this case, it was above the weekly, and then essentially consolidated the majority of the day within a $30 range. Now on the left, so in this picture, you see a standard view of trading view, and here on the right side, you see a range 60 chart. It shows basically that every $30, a new candle is being created. And this is for me visually, first of all, very pleasing, because you have much less noise on your chart. And even when price is volatile, within the range, you have a nice clean chart to look at. And I mean, you can see that here there's so many candles being printed. It goes up and down, obviously. And whereas on the right side here, you have only 1, 2, 3, 4 candles. And this is just, for me, this is very nice to... it just removes the noise. There's not so much happening, whereas normally maybe you would look at, like, let's say at a 1 minute chart, or some people even look at 1 second charts. Well, with this chart type, it's just totally not necessary, because you have the range in view, and it basically cleans up the chart. In addition to that, it also becomes very, very clear when price is actually starting to move outside of the range, as you can also keep track to how much time every candle takes to form, because of the new feature of extra charts that it has. So you now also have like this time function, so you can see exactly how long did it take for price to make these kind of movements. So in that sense, you can use this chart type to, for example, measure a breakout of the range, for example. Which makes it really, really helpful. And essentially, if candles are being created with each candle in rapid succession of each other, then it can give you a heads up that momentum is picking up and that volatility is coming back into play. And essentially, basically making ready that price is ready to start auctioning outside of the range. Another way to use the range chart type is, what you can use it for is to measure actual volatility. So if you see candles being created in rapid succession of each other, it shows that volatility is picking up. But range bars are also really good for identifying support and resistance areas, so to speak. And just like as in most other chart types, and it also has to do a lot with let's say volume and delta coming in. You can determine the buying and selling pressure and foresee a potential reversal coming, and that is where you can like use it for in a certain trending market. So this gives you like another way to use this type of chart. There's multiple ways to use it, but in my experience, at least the way that I use it, you get the best results when using this type of chart in a well-defined channel, and that can be an upward sloping channel, it can be a downward sloping channel, or a parallel channel. But this range type, it can really help you determine whether something is topping out or whether something is about to break up or down. Of course, not always, never a guarantee, but it can definitely help you if you understand this chart. It's just another tool that you can use to get an edge in trading. So to clarify that a little bit, as you can see on this picture, this is a range 34 chart. And we see here that on the drop that the candles are much larger than $17, because 34 divided by 2 is 17. So there's always a new candle basically being printed after $17 of price movement. And this indicates, because you can see that these candles are way bigger. And just only from this zoomed out visually, you can already see that basically it's an indication that big orders are being processed. And in combination with looking at other things like the delta color, for example, just visually, you can already see that it's mostly red. And that basically indicates that longs are closing out or getting stopped out. So additionally, of course, for full confirmation, you can also look at the open interest for extra confirmation. But I think this picture shows very well that just based off this particular chart type, you can already get so much information out of it, and it's really powerful in my opinion. So yeah, that basically is the range chart type. Then you also have another chart type which is called the range Y, and it's essentially basically the same. It's a small modification to even remove more noise. And personally, I don't really have a preference which one I like to use. But yeah, the range Y chart is basically a pimped, like a range chart on steroids. So it's a little bit cleaner. It's a little bit visually, it just shows less noise essentially. But what is now really the technical difference? I think it is important to know because the range is a classic range, so you have a high and a low, and the range Y is the modification where let me start off differently. In a normal chart, range chart, a new candle opens beyond the boundaries of the upper and lower point of a previous bar, and the bar closes in its top or bottom point. I'm going to show you a visual image in a second. So don't worry. A range Y chart is a little bit different than a range chart in the sense that, let's take an example that price is 0 and we have a range Y6 chart open. So price moves up $3 and then it starts a new candle, right? And then price then moves up from that open, moves up $1 and then moves down $4. And it now moved for a total of $5, and then only then a new candle gets printed. So basically the range Y chart calculates from the open and then measures the movement. So if you have a range 6 chart, if it opens and then for example moves up, but if it doesn't move 3 points up, then it doesn't print a new candle. But if it then instead does come back to the open and then moves 3 points down, that is when it creates a new candle. So I hope that makes sense in the way that it just calculates from how far price moves away from the open. So that's a difference. And that basically visually results in something similar to this. It's not overly, it's not entirely super differently, it's just a little bit cleaner in my opinion. Because for example, here is a good example. I hope you guys can see my mouse. Here's a good example, and here you can see price actually. To look at my note, yeah, this was a range 6 chart, and then basically after that happened, after this movement happened, it prints a new candle. But here you can see, for example, this was the close, and then here you have a new candle starting to print, right? Then it first moved down and then it first moved up. So essentially what it did is it basically merged these two candles, so to speak, together. And the reason why personally I like that is that you don't have to, if you're actively trading, if you're trading, let's say on a lower term time frame, you don't really want to move your chart all the time to the right, for example. And as you're zooming out and everything like that, you're scaling all the time. And then if you have, let's say, every minute a new candle being printed, you're spending a good part of your day just scrolling through the chart. And with a range chart, for example, you don't really have to do that. Another example where you can see at a set point, for example, price started moving up, went past its previous highs, and then closed the specified amount of ticks down before ultimately creating a candle. So I hope that makes a little bit sense. Let me check something. There we go. I see that I have a double slide. It doesn't matter. So those were the range charts, and I saw there in the corner of my eye, like, could you show an example of how you use those charts? Well, this is literally an example of how I used it today. As it basically, in addition to that, what we already know, this is like the visual way of how range charts looks like. But you can also then start to add in things like how much volume was in that candle, how much delta was in that candle, and how long did it take to form that candle, and all these different things really help you determining like the nature and the speed of the move, for example, and how much volatility is coming into play. So for example, if you let's say if you look at this example, and you have like this consolidation period, and suddenly you see price starting to move up and printing new bars faster, well, then you know the price is running out of the range, for example. At the same time, if you're using it, let's say, in a downward sloping channel, for example, in this sense, you can just clearly see that this move is drying up, because you can clearly see that there's no buying imbalances, for example, coming in, right? And because here you have like this big volatility movement, big candles, way bigger than the specified size of your range chart, and then you see like basically you have this retracement ultimately, and you can clearly see that this is on much lower momentum, because the bars are smaller as well, you know. So in that way you can just very clearly see what's happening. And at the same time, you can also use the things that you've already learned, things about like swing failure patterns, for example. You like all this knowledge, you can combine all of that into the footprints, into reading the actual footprints of these chart types as well. So if you're looking for a swing failure pattern, then what you also want to see is, you know, for example, heavy shorts opening up at the bottom of basically at support, and then after that you want to see buying imbalances coming in. Well, that can, in combination with the chart type that you're looking up, that can really give you a heads up of how big is the volatility that is incoming, and how does this look at the moment. And that is how you can specify, for example, of course, it's not always correct. It's not always 100% right. But you can react instantly. If you see these things happening, then you can really react very quickly what is happening at the price movement. So therefore, I think it's really powerful. So let's continue. My favorite one, personally, the tick chart. Basically what it means is one tick. If you're looking at a tick chart, one tick is one transaction. So bear that in mind before we move on to the next slide, because it's really important to not confuse this with what you with the tick size here. So what does it mean? If we look at let's say an 89 tick chart, it basically means that a new bar is being created after 89 trades. And that's where I arrive at tick charts. are different than tick size, because the tick, let's say tick times 4, is based on the y-axis, right? Which essentially means $2, because one tick is 50 cents, and that essentially means that for tick size 4 is that everything is being combined in increments of 2. A tick chart, on the other hand, so like tick 89 as in chart type, literally just means a new candle after 89 trades. So that's very important difference. So I have some stuff to say about tick charts, because personally these are the ones that I really use a lot, and they are one of my favorite chart types to look at, and especially when scalping on lower term time frames, as like I already explained a little bit earlier, on a 1 minute time frame sometimes nothing really happens for a couple of minutes, and then you just have like this tick tick tick, like sometimes, especially in the 80 days consolidation range that we had, you had like a lot of these moments that you're just staring at a dead chart, which creates noise in the chart, and you have to you have to scroll around, and maybe I'm lazy, but this is how I look at it. And tick charts, therefore, are a good way to keep the chart clean. And in addition to that, the way that I view tick charts is essentially, personally, I think this is something that comes the closest to a visualization of the order book. You can see the flow of orders and the trades coming in a way that gives you a sense of the order sizes and momentum all at the same time. And for example, if I see once again candles being printed in rapid succession, it indicates that volatility is picking up. And in combination, for example, with looking at the volume and delta, you can get a sense of bigger players that are entering or moving into the market or exiting out of the market. An example would be if you're looking on, let's say, a tick 230 chart, which basically creates a new candle after 230 trades. If you look at that type of chart with an average volume of, let's say, 10 million, and then on the next candle you see volume passing the 25 million mark on its 20th trade already, and this is something that you have to view in the moment. So on this candle you see volume passing the 25 million mark on its 20th trade. It essentially shows that 25 million of volume was transacted in less than 20 trades. So that indicates that there's big players coming into the market. And on the other hand, if you see that same amount of volume then being printed in, let's say, 3 or 4 or 5 or maybe even 10 candles, then you can safely assume that there's generally smaller traders at work, more retail traders, or not necessarily smaller traders, but smaller position sizes going into play, which then also makes a directional move a little bit less reliable, which I was under the impression of today, for example. So because I don't really know what price is doing right now because I'm in the middle of the stream, but basically during the afternoon what I saw was we had this rise above the weekly, and at that point in time I just couldn't really see real volume kicking in. So therefore I was in the impression it was a weak directional move, because in my opinion the bigger trades were not really there, and that is what you need to push price further. Not necessarily the bigger trade, because you also can have like a lot of candles with a lot of volume coming in, of course. But that's what I wanted to see, and now I really don't know what's happening at the moment, but that didn't happen at the time. So therefore I class that move as a weak directional move. So having that said, market structure was still intact, so there is also an argument to be bullish. But anyway, let's not go into Bitcoin for now. Let's stick with the content of the streams. So where was I? I guess I went a little bit off topic, but I still think that was a helpful explanation. If not, let me know. Another way that you can also look at it is if you, for example, see a very, very compact candle with a high amount of delta, then that signifies that there's absorption going on. for example, because you see all these big trades happening, but price is not really doing much, right? So that can also, you can then really visually see how much that things are getting absorbed. And this is what I like so much about this chart type. And I have to mention, this is the type of chart that you really really need to be at your computer, because these are all like these little subtleties that you're seeing in the moment. And for example, if you see these trades coming, and that's not something that you can see in hindsight, so therefore you really need to be on top of it. And I do realize that is definitely not for everybody, because it does have to fit your personal trading style. If you're not, let's say, a scalp trader, or if you're not a trader that likes to really be inside the beating heart of a market, because that's essentially the way that I view it, then it might not be the best idea to practice reading these kind of charts. But I do think that if you do put the effort and time into it, it will definitely give you a lot to go off of, and definitely make you a better trader. Yeah, having that said, so the bottom line, what I wanted to say is there are so many more things that you can see within these candles. But the thing is that I do feel like if I'm really going to explain everything in single detail that you can see, I would probably still be here tomorrow. And I also feel, especially with covering the range chart, I hope that you guys understand, by the way, because I do understand that it might feel a little bit overwhelming. But the bottom line is that ultimately reading the chart types does not only include the knowledge that I give in this stream, but you also really need to develop like a certain sense or feel for it. And I think the only way to really get that is to spend time studying these different chart types, have them on, like put in the screen time, observe, and like until you learn to develop a certain sense in reading it. And once you get there, so of course you might want to rewatch this stream a couple of times to really understand what are the differences between these chart types. But it is also going to be a process that I don't think that it's possible to learn this, let's say, in a day or in 2 days or something like that. So you do need to really take your time and just familiarize yourself, like expose yourself to these chart types and just develop a certain specific feel for it. And then only then, once things start to click, that is when you can start adding it, or probably you will do that automatically. That is when you're going to start implementing this in your personal trading strategy. And at that point, it will also become much more automatic, and you will just, you will see something and you already know what it means for you because you've already seen it so many times. So I guess that also falls under the category of having experience with these charts. Yeah, so like I said, so learn how to look at it, and how learn to read how these things moves and how it flows, essentially. Yeah, I think that's a nice phrase to end with, because ultimately this is order flow. So you need to get used to basically reading. You need to get a feel for it. So for now, I'm going to stop here with the chart types. And let's move on to some questions, and the other chart types will be covered in the next week's contender stream. So let's see if we have any questions going on. If there's nothing coming in yet, then we can. There we go. Oh, I'm looking at it. This is pretty annoying, because like right now my it's getting dark outside and I still don't have these lights on. Now it's apparent that I have like this blue screen behind me. I really need to do something about that. But anyway, some questions came in, so let's go over them. AKAK, is the range chart the same as the Renko chart? There's subtle differences, but I have to be honest, I don't use a Renko chart. I'm not very familiar with it, but they are different, definitely. Although they, of course, like the thing is that you have like chart types, they're like evolving. The thing is like the thought behind it is exocharts, for example, did not exist, let's say 100 years ago, but you did had a tape or quotation boards. That's where people read from. So it is kind of like these basic concepts that are basically evolving into something new, and the range chart is such a thing. They are connected to each other, of course, but they're not the same. There are differences. But I don't use the Renko chart, and I'm not an expert, so I cannot really give you a clear answer on that. So, hope that answers it for now. MMP. Does range Y merge candles from high term time frame together? What's the merging condition? The merging condition is that it doesn't really merge. What it does is it doesn't calculate the fluctuations of price movement. So let's stick with the 6 range chart, because it's, I think, the most easy to understand. So normal range chart, you have a chart type, right? And then it moves up or down $3 in price. Which way that does it doesn't matter. As long as it moves $3 in either direction, just prints a new candle. A range Y chart basically, of course, it starts with a basic measure point. So, you know, like a first range Y chart will always be a $3 chart, like a normal range Y chart. But then let's say it closes, and based off that new open of the candle, from there on it measures 3 points in movement. So let's say if you have like up and then down, then a normal range chart would already print a new candle. But with a range Y candle, you would have the open, let's say, you know, and then it just, from that open, it calculates 3 points. So if you go 2 points down first and then 3 points up, you have a little bit of a larger candle, and only then it prints a new candle. So I hope that I explained that well, but that's what's the difference. So it's not really like it's not necessarily something like a TPO chart or something where you can, like, you know, merge together different candles. That is not how you can do that, and that's entirely different. So I hope that answers your question. If not, then yeah, leave me a comment. What is your favorite tick chart? FinTech Outsider 89. Can you look at it live on ExoCharts and show us when you use it? Yeah, I can do that. I will probably do something like that on the Sundays Sunday stream. Yeah, why not? I can do it right now, actually. But to answer your question right away, my favorite chart type is the tick 230. This is my favorite one. Now Bitcoin is moving up, so there's a couple of things that how I like to use it. So I still basically have like an old chart layout that I'm currently using. Because of course ExoCharts added in time. So typically what I would do now is the following. Actually, I do have a template. Oh yeah, my beta profile. So that's my experimental template. Let me add and remove some things just to give you guys a little bit of a better overview. So what I'm looking at myself is I would add in time. So here, oh, I already had time added in this template, apparently. And just to measure if it's correct, you can also look here at the amount of trades. So you're 100% sure that you're looking at the right trade count. Let me add that below time. Trade count. There we go. So what you can see, right, is I have to select the right chart. That makes sense. So What you can see here is every new, you can already see here, right? Great feature by Extra Charts, by the way. I love this site. And because this gives you confirmation that the information you're looking at is correct. And I really like my information to be correct. Maybe a little bit OCD, but I don't care. So you can see this candle and you can see 230. So that's correct information, right? So we had 230. We cannot see the screen. Oh, right. Good that I saw that in the chat. So now you should be to see everything. Yeah. I was already thinking that MMP. I am going to share. I'm considering to share the notes. I will. Because I do think this is quite complex stuff. So yeah, I have here the T230 chart. This also saves me that that I didn't have to struggle with the chart type. But essentially, what you can see here, one candle, 230 trades. You can see that in the trade count, and you can basically see that this was an injection in volume. Why? Well, the reason is because you do see some in buying balances. So the entire candle encompassed 8.8 million of volume with basically 7.1 million in delta market buys. So that is based off of, if you only have this information, that basically says like, wow, there was an injection in volume. There was in this particular candle, there was essentially, it was packed with market buys. It was almost only market buys, right? At first sight, you would class this as bullish. But what did open interest do? The second thing that I also see, there was not really any interest in selling. So I'm kind of thinking there's this already, and this is the thing that I guess comes from experience, because I see so many zero here. That means that there's not necessarily interest in selling, but I'm also thinking, okay, if price is rising, then why are longs not, for example, taking profit, right? So that's what I'm judging that. So based off of this information alone, I assume that open interest is going down, right? So for me, this particular candle is not necessarily a bullish candle. It was rather stops. It was a stop run, because first of all, if you have like this compact market candle, like 8.8 volume, and 90% of this candle is essentially market buys, then people have their stops usually at market. So that's the first thing that I would think of. And judging, and then in combination with open interest, you can basically judge the nature of the move, right? So of course you can see so many more things, but this is one way of how much information I can already get out of this candle alone. So I think this is really, really powerful. But yeah, like I already said, I can see like 1 million different kinds of things in one candle, and I do think that that maybe should be done in a dedicated stream off of that. Maybe on Sunday I can do that. I'll have to see. So to answer your question, TIC 230 is my favorite one. JH. When you see bigger players entering the market, does that usually mean confirmation of the direction of the price or a reversal? Or what and how do you use it? When you see bigger players entering the market, does it usually mean a confirmation of the direction of the price? Well, that really depends on what side they're trading on. Because if price is moving up and suddenly you see big market sells coming in, for example, yeah, then it shows that a top, for example, is being really heavily sold, and this is really useful when you're using a range chart, for example. If you're seeing like a top or like prices going up, and you think, let's say you're having a channel, and that is why I think it works best with a channel, because you already have defined support and resistance areas. So as you approach that specific resistance or horizontal line, that is where you can basically see where the candle is, if the top is actually getting sold. So if you suddenly see longs taking profit on the top of a channel, or if you see people actively, aggressively selling that top, so shorting or taking longs, taking profit, then that can be a very early indication that you're at the top of a range, right? And then I would say a short is then a safer trade, and that is how you can also get really fine-tuned entries. But then again, if you, for example, if price is going up and you see big market buys coming in, yes, then 100%, then you want to follow that move, because that gives confirmation, right? If you see buys coming in, and you are also able to look at open interest as open interest is going up, so it shows you that it's not, let's say, shorts being stopped out, but it's new longs opening. Those are the signs of a healthy upwards directional move. So then you don't really want to short that, but you rather want to trade with that momentum. Let's see if there's any more questions. Apologies, by the way, for streaming the wrong thing. I suppose it was not that long, luckily. Let's see if there's more questions in the chat. Let's see. Could you show some examples of how you used 3 different chart types, and how the examples gave you an edge, if you haven't already done it by the time you read this? Yeah, definitely. I think it does need some clarification, and I do agree. I do assume that this is like not the. I don't. You should not expect this to immediately click, because as I already mentioned, you do just have to spend time with it, and you just also have to see it for yourself a little bit, and that I can now show you, we can now look at a chart, but I highly doubt that it will really help you fully understand what I'm talking about. So the way that I suggest that you use this stream is to, let's say, have a chart open on the screen, look at extra charts, and then on the other screen, if you have one, watch the stream at the same time, and really observe the chart while watching the theoretical side, which I gave you in this stream, at the same time. I think that is maybe the best way to learn that and to get a feel for it. And of course, in addition to that, like in champion streams, we can definitely go over that. 100%. I will do that. Good tip. Thank you. Nice feedback. The slide of wire range is behind your head. Can't see the last candle. All right. I'll post that one in the Discord chat then, Linda. Regarding your stream a while back with Daniel, you mentioned a massive winning streak with only exo charts. Can you share what strategy you used? Well, yeah, a lot had to do with basically it was mainly done through volume charts, tick charts, and delta charts. That's what I have been using the most in that particular period of time, because it's not that let's say that I only use tick charts or something like that. I do like to change my approaches a little bit, if I and that is what is the nice thing about having so many tools to your availability, right? Sometimes if you do certain TA, then it can lead to analysis paralysis, so to speak. So if you have that feeling, then what I sometimes tend to do is just switch to like a different tool, or in extra charts, switch to a different chart type, and just then you know it basically resets your brain, and it allows you to see new things. So it's not like I only use the tick chart. It's not like I only use volume charts. I change from time to time, you know, and at the moment the tick chart has my preference, but the other ones are just as good. Really, really hard to answer that, like what specific strategy did you use. To give you like a really simple answer, my strategy was trading off of order flow. That's how I traded. So really being aware of what is open interest doing, what is volume doing, what's delta doing, what is the general context of the market, from high term time frame all the way to the 1 minute chart. If you're not, oh, that's a good question. If you're not on a time-based Matic, if you're not on a time-based chart, but any other chart type, if you see CVD divergence, is it the same as on the time chart? Can you consider it as confluence? Yes, you can. Yeah, it works exactly the same. So if sometimes if it confuses you, what you can do to confirm for yourself, I believe earlier today we had some divergences over here. Very, very small divergence, like almost negligible, but it was a tiny divergence. And I think, yeah, it actually played out, didn't it? Where's it further back? Now, this is the thing why I don't want to show it now, because I do need to find examples, and it's time consuming. I need to like go back into the charts. So I'm gonna leave that for another time then. But yes, CVD divergences are also into play on these type of charts. And if you're unsure, then all you have to do is switch to like a normal time frame chart and have your confirmation, go back to something familiar, go back to like the confirmation that you were having, and yeah, basically that. And then switch back to the chart that you're, let's say, practicing on. We have some more questions. How do we know if those are market buys and not limit orders? On extra delta is only market. Limit orders are not included in delta. So that's how you know. Question: could you go back to a recent breakout? Look at the picture. Yeah, I already answered that one. Could you comment on the current movement with range charts? I guess I could. Well, basically I would reach the same conclusion at the moment. Okay, so let me give you an example. Let's go to the chart. Let's look at Bitcoin. So I would say just remove all the noise. You could say that at the moment Bitcoin is more or less in something like an upwards sloping. Let's assume that this is an upward sloping channel. I like that channel. So what am I gonna do? I'm observing here on TradingView that we're now at the midpoint in the channel. So it should at least provide a little bit of resistance, right? If it's a valid channel at all. So because I would say it's valid because we have 1, 2, 3 points of 3 touch points, and we also have like a midline that did give us some sort of a reaction. So based off of that, as you, let's say, approach this level, that's the moment when you're switching to, let's say, exo charts, right? And then depending on how big these movements are, so let's say they're how large would that be? So from the bottom to the top, let's say more or less, and it doesn't need to be exact, you know, so we can say that this is 160-ish, like let's say $150 up and down, so to speak. So what do you do then? You want to then look at a range that is close to 300. Well, that is like not necessarily, that's not here. So we're going to go, what we have is range 200, for example, right? So, and then as you approach a specific level, then what you want to essentially see is how does the volume look like? How fast is it approaching? How big is the candle, right? So because if a candle is bigger than the average, then it shows that there's big volatility going on. It shows large orders are being processed. So, but if a candle, let's say, is, for example, really small, and you have a lot of volume in it, right, then it can show that there's like some struggle going on at that point. And then if you on that consecutive candle see negative delta increasing and also the volume increasing, for example, then you can clearly say that you're getting rejected from that. But the main point that you're taken away from it, now you're only getting a candle in this case, every $250 movement. So if you're a larger term time frame, then this might be a chart to use, right? Because it's like really easy to read. You have like the situation of the market all visible, all in one place, and it's also not really changing that crazy. And also, if it does change rapidly, then it's time to pay attention. So yeah, that is the closest that I can get right now as an improvisation example, so to speak. So I hope that helps. I think those were all the questions then. So that then concludes essentially the live stream of tonight. I hope you guys had some really good insights, as I reckon this was probably some really new stuff for you guys. So I hope you guys can dive into this, and of course, if you have any more questions, then ask them around in the chat, as I'm gonna be there all day. So to finalize and to summarize, range chart essentially measures from high to low. Range Y measures from open and then from high to low. So that's the difference. Tick prints a new candle after an X amount of transactions based on what setting you have it set to. So an 89 tick chart gives a new candle after 89 trades. Final words. I would say with this kind of new knowledge, I would say do not rush. Do take your time. Take your time learning, and just spend some time observing the charts, and see which chart also you like the best, and also what conclusions you can pull from your own observations, because I think that is really, in my opinion, one of the best ways to learn this, and ultimately that will help you like get a feel for it. That concludes the live stream of tonight. Thank you very much, and see you around. Have a great evening. Bye bye. Cheers.